Hey everyone, welcome back to my channel. Today I'll be breaking down a couple of trades I took this morning on EURUSD and USD CHF and walk you through my thought process and what made me enter these trades. Both setups align with the strategy that I previously discussed on this channel that is based on external and internal range liquidity. Guys, I highly recommend you to go check it out. If you don't have a trading model yet, the strategy can be your savior. I will leave the links to the videos down below. Anyways, in this video, I will also share with you the full trading plan and demonstrate how to apply it on the charts. So, without further ado, let's dive right in. So let's start first with the EURUSD chart. Alright, so it was a long position and here is the execution. Alright, so entered from here and exited from here. And now let's head to the chart. And I'm going to show you exactly how to apply this strategy right here into the chart. So let's start with the first thing, which is the buys. All right, I told you before that we're going to use the weekly, daily, 4 hour, and we're going to look for moves from internal range liquidity, from fair value gaps to external range liquidity, so to swing highs or swing lows, and from external, so from swing highs or swing lows into fair value gaps. So these are retracements, all right, and these are continuation trades. All right, so you can trade both sides of the market with this strategy right here. Anyways, let's now try to apply this step. You can pause the video right here and try to apply it yourself. If you can't, don't worry, I'll show you how. So as you can see here, we have an expansion leg to the downside. This expansion leg to the downside took external range liquidity. All right, so this swing right here, this is external range liquidity. Price after taking external range liquidity, we can expect a retracement to fair value gap. All right, price cannot just keep going down and down and down without retracements. It needs to retrace to an imbalance, and we have that here. All right, so here's this imbalance. All right, so we are expecting that retracement to this imbalance right here, at least to this. All right, it can go up, but we are looking only for this imbalance to be filled. And as you can see here, the first step is done from external to internal. And now we move on to the second step, which is the confirmation or the narrative. We're going to use the 4 hour for this. So weekly 4 hour. All right, so I like to call it how. So how price would go to that imbalance. All right, so the PD arrays, and here we want to see a market structure shift, sweep first or an SMT, and a market maker X model. These are for targets. And let's go now to the 4 hour chart and see what we have. So as you can see here, from here to here started turning bullish. All right, so the 4 hour is confirming our buys to go to this level right here, which is the weekly fair value gap. So here we have a sweep on liquidity, right, and then an expansion higher, leaving a fair value gap here. But most importantly, it left this order block on discount. All right, so we have a discount order block right here, and from that order block right here, we have another expansion to the upside, right, and that expansion left a nice fair value gap right here. So now the 4 hour is confirming our bias of going up, right? So as you can see here, we have this market structure shift, we have that sweep, all right? And that market maker X model, we're going to see it clearly on the execution time frame. So the bias check, the confirmation or the narrative is in check right now. And now all we need to do is to go to the execution and look for entries. So we're going to use the 15-minute or the 5-minute for this case. And excuse me, this time window is actually for indices, so I forgot to update it. So for Forex, it could become from 2 to 5 and 8 to 12 p.m. Easy as that. So we want to see a market structure shift from a PD array on the confirmation time frame. So in our example, we have this fair value gap right here, and we want to see price give us a market structure shift from this fair value gap. All right, and we also need a market maker X model to target. And now let's head to the 15-minute chart and we need to see a sweep first before that marks such a shift or SMT. So we have an expansion, and we have also this breaker block right here. Price violated that breaker block, closed above it, and then it found support right here. And now if we head to the 5-minute, we can clearly see an entry right here. So this is the 5-minute chart, and as you can see, we have a mark such a shift, and we have that fair value gap right here. So this is a perfect trade, guys. This was a high probability trade. It has a lot of confluences, and whenever you see multiple confluences, that means that this trade is high probability and you can execute without any hesitation. And here's that market maker buy model that we have talked about. So we have the original consolidation right here, and we have accumulation of shorts right here, right? So we're going to use this to target it. So you can see that there is a lot of failed swings on here, right? So we're going to use this to target. And if you go back to my old videos where I did trade breakdowns, I told you a lot of times that whenever you see this kind of formation, so a market maker buy model or sell model, you can expect this kind of moves, guys. All right, price will explode to the upside or melt to the downside whenever you see this formation. This is why you need to have a market maker X model in place for smooth delivery. All right, so this was the first trade, and before I forget, we also have that Judah swing. All right, so here's the midnight open here, and we have a Judah swing to the downside. The Judah swing, I told you that it will either take liquidity or it will retrace to a PDRA. In our example, it retraced to that PDRA, to that 4-hour fair value gap right here. So this is, guys, a perfect trade. It can't get any cleaner than this. So as you can see, it went straight to that weekly fair value gap, that weekly internal range liquidity. And once it got there, a nice reaction to the downside. So the second trade, which is on USD CHF, all right, it was a short position this time, and here is the execution. All right, so entered here and exited here. And now let's head to the chart and show you how to apply this strategy to here. Again, you can pause the chart right here and try to figure out the external and the internal range liquidity. So again, let's start with the buys, and here we're going to use again the weekly. All right, so here we're going to use external to internal once again. All right, so as you can see here, price took external range liquidity and it left this internal range liquidity. All right, so a retracement to the downside is expected, and this is our buys. That's it, simple as that. I don't know why people complicate this. I honestly don't know. So our buys is in check, and now we go to confirm it on the 4-hour or the 1 hour. And of course, I'm not going to repeat all this. The same, the usual. I'm going to use the 4-hour for this. And now let's read the order flow of the 4-hour. So as you can see here, price after took that external liquidity, and here we have another sweep. All right, so price now on the 4-hour started turning bearish. Right, we have an expansion here. I'm not interested in this. And now we have another expansion. This looks promising. We have a sweep here, right, and then an expansion, leaving an order block. Price reacted nicely to this order block, and now we have another expansion to the downside, and of course leaving an order block right here. So we have an expansion to the downside, a break of structure. I told you to look for sweep. We don't have a sweep here, but we do have an SMT divergence, and let me show you how that looks like. So if we add the Dixie to here, which is the correlated pair, so if you compare this high right here, right, this swing with this swing, you can see that this swing violated this high right here on the Dixie, while on the USD CHF it didn't, and price is indicating that it wants to go lower to here. All right, so we have that SMT divergence. We don't need to see sweep, and price then left this order block. I outlined the wick of the order block. This is something that we need to discuss separately in another video. So how to anticipate that the wick will push price to the downside. the next step is in check, and we have that market structure shift, right? The buy is in check, and now all we need to do is to look for a market structure shift from that PD array, which is that wick of that order block. All right, so we're gonna use the 15-minute for this. So on the 15-minute, what do we have? We have that order block right here. We have market structure shift, right? And we also have that market maker X model. It doesn't look nice right here. As you can see, it's messy. But remember, why do we use a market maker X model? Because of its property of low resistance liquidity. And we do have that low resistance liquidity right here. So this filled swings right here will act as magnet to price, all right? So anyway, I missed this low sell right here. So low risk sell. And then we have another market structure shift right here. And we have an S&P divergence here between this swing and this swing, all right? So we have that condition in check. And now all we have to do is to take the entry. And the entry is from here, that first PD array. And as you can see, this candle right here tapped into that fair value gap. And it was 11:45. So we are still in that time window, all right? So the trade would be here. Your stop loss is here. And target placed to into that weekly internal raise liquidity. And we do have that here. So two trades, two high probability trades. I can't ask for cleaner moves than this, guys. And remember, you only need 2 or 3 high probability trades per week, so don't push it. So I believe we have come to the end of this video. As you can see, a simple training plan with discipline and good psychology. You can make wonders by this, guys. And please don't study it for a week or 3 days or something and you go live with it, all right? Give it at least a month of studying and then decide whether you can continue to trade it live. So if you have any questions, please DM me on my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.